fact, to one of the big stories of the day. The U.S. Federal Reserve Chair Jerome Powell's dovish message in his speech in Wyoming. Let's go to Henrietta Treyz on this, co-founder, director of economic policy research at Veda Partners. Thanks for joining us today.
Thanks so much for having me.
So the markets clearly embraced what Powell had to say. Did he, in your mind, clearly throw open that door to a cut?
I think he clearly threw open the door to a change in policy. And I think the core read that I have is that the Federal Reserve Chairman is expecting a substantial amount of volatility in the months ahead. And I think that's probably something that the market responded ebulliently to, in the expectation that, hey, we're going to get an interest rate cut. The jobs picture is taking over and taking prominence. But Powell clearly left the door open to an analysis of tariffs that are going to be even more volatile in the next couple of months than they have in the last 6 months. If that's even possible, I know it sounds crazy to think. But the president is, as we speak right now, announcing new investigations into the trade in furniture, pending more tariffs across that sector. In my opinion, preemptively trying to front run the courts that are going to determine the president's authority to impose tariffs under IEEPA are unconstitutional, and a whole host of other core items that he's going to have to adapt to, and Powell is going to have to adapt to as tariffs start to sink in for the U.S. consumer.
Okay, we'll talk a little bit more about that ruling to come in a moment, which could unleash a whole new set of headaches for everyone involved. For the September possibility of a rate cut, could you see it as 50 basis points?
I think 50 is a lot to ask. Let's think about what the jobs picture is telling us. We've had relatively stagnant job growth, 35,000 jobs in the last 3 months, but the unemployment rate is 4.2%, and we have no more immigration in the United States. So I struggle with this idea that we're hitting a job slowdown when we don't have any incoming folks to take over jobs, and things have been pretty stagnant. Folks are staying where they are. So I don't know that this idea that jobs are going to supersede the inflation narrative is going to hold, especially as we get into data on inflation in the next couple of months. So a 50 bips cut, to me, suggests that the jobs picture is really problematic. And I think that's going to be tough to square with a rising inflation picture, especially as prices are passed on to consumers.
Interesting. Okay, so on the same end, would it be a one cut and done, you think, or perhaps a series of smaller cuts then that take you to the end of the year?
I think a one cut and then done for the time being, to sort of pump the brakes and see where things land. Be mindful that this IEEPA court case that I mentioned before is going to take several months from here to actually fully flesh out. Even if we get the results from the Federal Circuit Court next week, it'll be probably at least until late October, if not November, before the Supreme Court rules on the appeal that we're expecting from the White House. So there's an opportunity to cut in September, but I think that the president is really racing against the clock when he's asking for interest rate cuts. And I don't think Powell wants to move more than 25 bips. And there's a lot of reason to hold thereafter.
Will the Fed remain free of political interference? We've seen his poking at Jerome Powell. He's doing some other poking now. What's your consideration of the political interference angle, and whether you think they can remain free of more of this attempted interference in the future?
I think Powell made a really forceful argument for being policy agnostic and politically opposed in terms of just not accepting political pressure. And you certainly see that from other Reserve Board members as well in the last couple of days, as we've seen the escalation around investigations. What I say to investors, and my background is in the United States Senate and the specialty there, is that I don't think that there's an opportunity for Stephen Miran to get confirmed before September 16th. We have a tremendous backlog of things to do, most notably a Defense Authorization Act that's going to eat up probably the full 2-week period of time that the Senate has that would otherwise need to be spent confirming Stephen Miran and getting a Trump-appointed, clearly 2025-oriented interest rate cut minded member on the board. So I think that's going to be a little bit delayed. This political pressure is not going to go away. It is plainly the new normal, whether that's at the Bureau of Labor Statistics or at the Fed. We're seeing it run the gamut, and I expect that to continue. And it's something that we all need to anticipate will expand potentially into other sectors. We've already seen substantial turnover at the IRS. That political calculus around who the president has working for him, which he now, obviously thinks includes the Federal Reserve, is going to be with us, I think, for the next 3 years. Okay, so putting aside the fact that there is a decision by the courts coming on whether or not Donald Trump has the authority to make these decisions regarding tariffs, Canada, as you know, is pulling back reciprocal tariffs on goods that are coming from the U.S. that are compliant under what we call CUSMA. Canada has been giving. They gave up the digital services tax. They've moved back now on the retaliatory tax. In your opinion, will it end up serving Ottawa in the long run when you see sort of how these things are working out for other countries? I think that the issue or the cards the president is teeing up to play as we go into USMCA renegotiations that will need to be resolved by next summer is to have as much leeway as possible with Canada and with Mexico as well, and try to get as much before the negotiations start as possible. I do think that these tariffs are going to stand for a while. And as you know, we have a number of sector-specific tariffs that are designed expressly to target Canada, whether that's on the lumber side and potentially on the dairy side, which we've seen them make other moves on as well. So I don't see the tariff threat being removed or the tariff impact from the U.S. side. I think the Canadian efforts to put things at a 0% tariff rate on USMCA compliant goods puts Canada more in line with where the United States is and where Mexico has been. So I'm hoping the three nations stick together and are able to negotiate a renewal of the USMCA. But the president of the United States has plainly been trying to fracture Canada and Mexico apart, which I think has been counterproductive because Canada and Mexico have gotten even closer together. So as we head into the fall and we're expecting the business community to really start negotiations, kick those off in October, this is a good starting point to have. I think it serves the president's narrative that the tariffs are working and that will behoove Canada. Yeah. But we're a long way away from getting these tariffs off. And I think we should expect sector-specific tariffs to come in the interim, especially as that IEEPA court case is in limbo. Okay. The president's alternative is 232 and 301 investigations, and that's what we're seeing right now. Henry, I got to leave it there. I'm out of time. But thank you so much for your time. Henrietta Treyz joining us there.